to type in a symbol or two. That way we can analyze the chart together and show you how this system would have worked on that security. And then, of course, time permitting, we'll answer as many of your questions as possible. Okay? A couple of poll questions first, just so I know who's on here, and I can target my examples to you specifically. Can you tell me how many of you have seen me present at an event or a webinar before? Can you please take a moment and type a Y or an N into the chat box here? Excellent, great. Thank you very much. All right, a good mix. Excellent. Just a couple more quick questions, very quick questions. Which market do you trade most? Is it stocks, options, futures, or Forex? Please take a moment to type that in. Just going to grab a sip of my coffee and then we'll get started. Okay. Thank you very much. A great mix as well. A lot of options traders, futures. Awesome. One last question. On average, how many trades do you place per month? Is it 1 to 10, 11 to 20? Or are you very active? 51 to 100 or 100 plus? I promise with what I show you today, I will do my best to show you how to stay very active in the markets, but we already have some very active traders here. Excellent. Okay, let's get right into this. Please remember, trading can be extremely risky if you don't know what you're doing. Please educate yourself and do not trade with real money until you're completely comfortable. On that note, let me share with you how we minimize our risk and our exposure in the markets here at Trading Wins. These are our money management rules, and the first one I'm sure you've heard a million times: do not trade with money you can't afford to lose. But really, what this is about trading with an amount that's small enough that it feels completely insignificant to you. Trading is so much more important, so much more about how you manage a trade once you're in it than it is selecting an entry. So when you're in a trade, you need to be able to remain calm, think clearly, and manage that trade appropriately. And if you're worried about the amount of money you have in there, you won't be able to do that. So regardless of the amount, just make sure it's small enough that it feels completely insignificant to you. Also, you should never risk more than 5% of your account balance in any one trade. And if you have a larger account, consider reducing this to 2.5%, even 2%. That way, you'll still have a sizable trade on, but you'll reduce your risk considerably. And next, never have more than 50% of your account balance active in the market at any one time. The reason being, excuse me, there are so many factors when it comes to the markets that are completely out of our control. And any major news announcement or, God forbid, another event such as 9/11 happens, it'll drive the markets against you. So this is meant, first and foremost, to limit your exposure should such a loss occur. But if it does, then you'll have 50% of your account balance still there that you can put back into the markets and recoup from such a loss. And with what I'm going to show you today, it really wouldn't take you very long. Lastly, you should spread your trades out. Only pick the 1 or 2 best trades per time frame. You know, we've seen many days where the Dow, for example, was up 300 points one day and completely retraced the next. Well, on those huge up days or down days, you're going to get several setups in that one direction. And if you put on multiple trades and the very next day the market retraces, you're going to be in a big hole right off the bat. And that's exactly what we're trying to avoid. Just spread your trades out, pick the 1 or 2 best trades per time frame. Okay? A couple of other sayings we live by here. One, you will never go broke taking profits. And if you're just starting out, I really encourage you to write this down and live by this. I mean, once you gain more experience in the markets, you'll learn how to remain in a trade a little longer each time and squeeze out every bit of profit. But until then, when you have those profits, get used to taking them, okay? And please remember, trading is not about your ego. It's never about whether you're right or wrong. That's important. But it is all about how much money you make when you're right versus how much money you lose when you're wrong, okay? So what will you need to trade this setup? Short answer is not a whole lot. You can use just about any charting platform. Reason being, we're plotting one indicator on our charts only, and that is the 20-period simple moving average. Now, you won't even need this, really. It's more of a visual aid than anything, but I'll explain more about that in a little while. So, bottom line, there's no need for you to go out and spend more money on new hardware or complicated charting software. If you're watching this webinar, you already have everything you need. Now, benefits of this system, number one, it will work on any market, stock, options, futures, Forex, globally, any time frame, any price level. It works across the board. It's based strictly on technical analysis. You do not need a lot of experience for this. Any trader, any investor will be able to pick this up and use it very, very quickly. It is very easy to spot the setup on a chart. I'll show you exactly how easy in a moment. It has very clear entry and exit points, and it is strong enough to be used as a standalone system, but can be a great complement to whatever you're trading with right now. So a bit of background on the strategy. There were 5 main things when we first sat down to create this that we considered must-haves. And number one was it had to be simple to spot on a chart. We didn't want something very complicated with many indicators that would allow us to miss setups. And you'll see just how clean the chart is in a moment. It needed to be used on any charting platform, and it is. I've yet to see a charting platform that does not have the 20-period simple moving average indicator. It had to be easy enough to be used by any trader or investor, but more importantly, it had to have extremely low risk, and I'll show you just how low that's going to be. And most importantly, it had to be consistently profitable. Now, we have been trading with this system for many, many years through all different types of market environments, and it has been consistent throughout. So there are only 2 components to the strategy. The first one I've talked about, which is the 20-period simple moving average, and we have actually traded and tested this with exponential moving averages, with weighted moving averages, different time periods. We've come back always to the 20-period simple moving average for the simple fact that it just works best. The other thing you'll be looking for on your charts excuse me, is an engulfing candlestick pattern. Now, many of you might be familiar with it. If you are, we use it slightly differently. And for those of you who do not know what it is, no worries. I'll explain it and draw it out for you exactly step by step. Okay, so for the benefit of those just starting out, a simple moving average is calculated by adding the closing price of the security for a number of time periods and then dividing this total by that number of time periods, just a straight average. And the engulfing pattern is actually a reversal pattern, and it can be bearish or bullish depending on whether it appears at the end of a downtrend, which would be a bullish engulfing pattern, or at the end of an uptrend, which would be a bearish engulfing pattern. Now, rather than explain it all off this little diagram, let me bring up my charting platform and walk you through this setup step by step. Now, there's a couple things we do here at Trading Wins whenever we bring up a chart and are considering placing a trade. One little exercise that we find beneficial is to remove all the indicators off our charts. Okay, we're going to clear it off completely, and what we want to do is just look at the price action. Now, if I put up a chart such as this for you and asked you, what's the next direction of this stock? Where's it going next? Would you really be able to tell me, or would you be taking a guess? And this is exactly what you don't want to do when you're trading. You don't want to be guessing. Okay? None of us have a crystal ball, but what you want to do is put the odds in your favor and make trading easy on yourself. So if I asked you the same question on a chart such as this, would you be able to tell me? It's a much clearer picture. Okay? Sure, these things can roll over at times, but your odds of success trading with trend and momentum are much higher than trading in choppy markets. So here's another example. Okay, nice, clean, steady uptrend. That's exactly the kind of stock you'll be looking for. Okay, so let me throw the 20-period moving average back on here, and we will get started with this right away here. Let's put this back on here. There it is. All right. I'll draw this out for you step by step. We'll take our time with it if we can, and then I'll answer all your questions, I promise. So here we have a chart of the cues. Now, we talked about how, the kind of charts we want to find that are trending nicely. Secondly, we'll be looking for momentum. So how do we judge momentum? We judge it by the slope in the candles here, or the 20-period moving average. This is where we use the 20-period moving average. It kind of draws that slope in for you, okay? Now, the other reason why we use the 20-period moving average is because no stock goes up in a straight line, and when it does retrace or consolidate, it will be easy to mistaken that pullback for downward momentum. But if you can see in this example here, when the stock does consolidate or retrace, the slope in the 20-period moving average is maintained. It hardly changes at all. That helps you understand that this is merely just a pullback before a continuation of the trend. Okay, and that's why we use that 20-period moving average. So now let's talk about the actual setup. This is what you're going to be looking for on your chart. Number one, you're going to be looking for a slope higher, and the more significant that slope, okay, the more momentum in your favor. So the higher the slope, the better. Then you're going to be waiting for some type of pullback or consolidation, and then it's at this point that you'll be looking for that reversal signal in the form of a bullish engulfing pattern to tell you that this retracement is over and that the move is going to continue. Now that bullish engulfing pattern is going to look like this, okay? And there's a difference between the setup and the trigger that gets you in the trade, okay? Let me explain. Actually, let me redraw this a little better. Okay, so for the purposes of the setup, all we're looking for are the bodies of the candles, not the wicks or the tails, just the bodies. Okay, and what we need is that the body of this candle completely engulfs the body of this candle. Now they can be at the exact same price point on either end, but the candle on the left here, the body cannot exceed the body of the candle on the right. Okay, so this here is a proper setup. Now for the trigger into the trade, you're looking for a trade just above the absolute high of that engulfing bar. Now for the trigger, you do consider the wicks or the tails, okay? So you're looking at a trade above the absolute high of that bar. And if you get it, you go along and you put your stop just below the absolute low of that same bar. So your risk will always be contained to the range of that one bar, okay? Same thing for short trades. You're looking for a move lower, and again, the more significant that slope lower, the better. Then you're looking for a pullback or retracement, and then it's in this area that you're again looking for a bearish engulfing pattern this time, which will really look the same as the bullish. In other words, you need the body of the candle on the right to completely engulf the body of the candle to the left. Okay? The only difference between the bullish and the bearish is that for the bullish engulfing candle, you want it to be green. In other words, the closer it closes near its highs, the stronger that follow-through move tends to be. And for the bearish engulfing candle, you want it to be red. Okay? Again, you want it to close as close to its lows of that period as possible. All right? And this bearish engulfing pattern is telling you that this retracement is over and that this move lower is going to continue. Now, the candle before, the candle on the left in either example can be any color, okay, red or green. It really doesn't matter, okay? Now, again, for the entry or the trigger into your short trade, you're looking for a trade just below the absolute low of this engulfing bar, and your stop will go just above the absolute high. Again, always restricting your potential loss to just one candle. Okay, so let's go through some examples here on the cues where I had drawn this in. You see we had nice trend and momentum, nice strong slope in our favor, We then get a period of consolidation here for a few days, and that's when we're looking for that the bullish engulfing pattern, which is right here. Look at the body of the green candle, which completely engulfs the body of the red candle here. And then for a trigger in, we're looking for a trade above the absolute high here of the bullish engulfing bar, including the wicks, okay, the absolute high. Once we get in, our stop goes just below the low, okay? Then it's a matter of managing that trade. But there are a couple of very important rules that you must know here, okay? First of all, when you're looking for that trade above the high, if the stock trades below the low first, the trade is negated or disqualified, okay? And that one rule will save you from most losses you would otherwise have. In other words, most of the trades that don't work out with this system are not even losing trades, they're just disqualified trades. And there's another rule that would allow you to disqualify a trade as well. And that is, if you get two more completed bars, and you still have not traded above the high, you also disqualify. Reason being, the momentum must obviously not be as strong as we initially thought, okay? Now, in this example, on the second bar, it does trade above the high, so we enter long, put our stop there, and then manage the trade. Let's go through a few more examples. Here's a chart of United Continental, and again, it's that slope and momentum that we're looking for. And here, you can see here, using the 20, how well it works. When you get that pullback or consolidation, that 20 hardly moves there. So in other words, we're at the point where you get the reversal pattern here. That can happen in front of the moving average. It can overlap the moving average, or it can happen below the moving average. It really doesn't matter. What's important is that at the time that you get that setup, the 20-period moving average must have maintained its slope. If it pulls back too far, the 20 is going to start flattening out and rolling over. And if that happens, you've lost momentum and you no longer want to take that trade. Okay, so it's crucial that the slope remains intact. Now, there's another reason why I wanted to use this example. See, on the very next day, we have this little bar here. Now, believe it or not, the high of this bar is 3 ticks above this one. So we did actually trade above the high here and get in on this day. Now, we were lucky and it gapped the next day and off it went. But let's assume that this had not gone above the high here and that it was this candle that traded above the high. In other words, if your entry is on a gap, you must reassess the risk on that trade, okay? Because remember, you're looking for a trade above the high. If it happens up here, this will be your entry, but your stop will still go below just below the low of that same engulfing bar. So now your risk is no longer from here to here, from high to low of that candle. It's now from up here, your entry, down to here. So if this amount of risk is too much for you, then just skip the trade. Because what we find is that when there is a sustained trend, you're going to get multiple opportunities to enter. There will be many setups along that trend. Okay, so you can afford to be patient and wait for the proper setup. The other thing you're going to notice is that normally when we are triggered into a trade, it tends to move in our favor immediately, which is huge for a couple of reasons. One, remember when I was talking about the money management rules, I said it's much more important how you manage a trade once you're in it, and that you have to remain calm and think clearly. Well, if it moves in your favor immediately and you're already in profit, that's going to help you immensely when it comes to remaining calm and managing that trade. And second, I noticed most of you trade options here when I asked that poll question. And for those of you that do, you know that if you get in an option trade and it goes against you right away, trying to make back that loss in premium is going to require a much greater move to the upside. So having the trade move in your favor immediately with options is huge. Okay. Now, here's a trade or a chart of Mattel. And Mattel had been dropping just about all year here. And I've got a number of setups here highlighted, and you can see that once they trigger, they move nicely in our favor, okay, all of these were winners. Now, I'm not saying all trades are going to be winners. They're not. You will have your losers, but your losers will be contained to the range of that one candle. Remember that. And your winners will be much greater, okay? But here in yellow, there's an example of disqualified trade. So let me zoom in here and explain these. So we have this huge gap down on Mattel after earnings and a follow through lower, which creates this huge slope lower. And then the stock consolidates and we get a bearish engulfing setup. So what we were waiting for at this point was a trade below the low of the engulfing bar here. Instead, the very next day it traded above the high. Therefore, was negated or disqualified. A few days later, we have another setup. And again, we're waiting for a trade below the low of this candle. But next two bars close, and we still have not gotten a trade below there. Again, we disqualify it. Okay? So those are examples of the trades that get disqualified and that prevent you from taking those losses. Let's look at a few more. Here's a chart of Starbucks. And all we're trying to do is pick out the easy trades. Here is another period of trend and momentum in our favor. We have a nice sharp slope higher, a nice orderly pullback, and there's that reversal signal telling us that that pullback is over and that this move is going to continue. And you can see that the slope in the 20 was maintained throughout. So during this pullback, there was no change in the 20 here. Okay? That helps you understand that this is merely a pullback. Once you get your setup and you wait for that trade above the high, which happens in here, okay, stop goes just below here, and then it becomes a matter of managing that trade. Here's another example. Now, look at these two, okay? They look identical except for one thing. Look at the size of this bar, this engulfing bar, and look at the size of this engulfing bar, okay? So again, you can be very selective and select the trades that match your risk profile, okay? And it's a very, very minimal amount of risk compared to that potential profit you have, okay? Now, no one's saying you're going to catch the full move. And none of us know exactly where it's going to end, but you'll do very well catching just the middle 60%. But we have an exit strategy we use that allows you to remain in the trade for most of those runs, and I'll touch on that a little later. Here's an ETF, United States Oil Fund. Okay, again, when you have trend and momentum in your favor, half the battle's already won. All right, and so up here we have a bit of a slope. Now, if this wasn't a significant enough slope for you, you can skip this trade, even though it would have worked out nicely, because during a sustained trend, you're going to have multiple entries. Now here, this one was disqualified. Why? Because the next two bars closed without a trade below the low of this candle. Okay, but a little while later, it trades lower, pulls back. There's a nice reversal signal, triggers us in the very next day, and off it goes. Now, what if you're already in a trade and you're getting additional setups? Well, if you're more of an aggressive trader, you can add to your position at each one of those setups. If you're more conservative like me, you can just maintain your original position and just use these as additional confidence that you're in the right trade and you should remain in this trade a little longer. Okay? Here's a chart of Visa, and here's another example here where we did have a nice slope lower, and we got that pullback. Let me zoom in for you. Right here, we got this pullback. Nice bearish engulfing bar. We were waiting for a trade below the low to get it a short, but instead it traded above the high first, which disqualifies this trade. A little while later, it gaps huge on earnings, runs away, consolidates for about a week. There's our reversal signal, and boom, there it goes. So again, we've taken the components of technical analysis that have been proven to work over the years and wrap rules around them to allow us to pick out the easy trades. Okay, if you're trying to trade in this back and forth mess like this is where you're going to get into trouble. All right, picking out the easy trades is what you'll really have success with. Here's futures, chart of the crude oil futures. Again, nice, easy trades, easy to manage because again they pretty much go in your favor right away, right? And the key here, okay, there's no secrets here, there's no rocket science. All it is trend and momentum, and the stronger that slope, okay, the stronger this slope, the higher the likelihood that that move is going to continue in that direction. That's what this is all about. Here are the gold futures, okay, a pretty ugly, pretty messy chart, but you can see during the periods that have nice momentum in our favor, boom, there's a nice trade there and another nice one there. Very easy. Okay, currencies for you Forex traders, everything remains the same. The settings, the rules, nothing changes. Okay, you're looking for that slope higher, that consolidation, which can be 1 or 2 bars, it can be 5 or 6. It really doesn't matter. What matters is that at the time that you get that reversal pattern, that you must make sure that the slope on the 20 has been maintained, and then boom, off it goes. Okay, same thing. Now, sometimes when the move is so strong, there is no pullback, and you will miss that move. No worries. Just be patient and wait for the next one. There's plenty of setups. Here's a chart of the British pound US dollar. Okay, again, throughout the choppiness, no trades. Once we start gaining some strong momentum in our favor, we get these reversal patterns, and it's just picking off the precise entries here. Well, boom, boom, okay, and there's a way to stay in the bulk of this move all the way to the end. Okay, here's a disqualified trade. Why? Because once we get that bearish engulfing pattern, we're looking for a trade below the low, but the next 2 candles do not break that low, so it's disqualified. A few days later, boom, there's another one. Now, when you see a very long bar like that, might be too much risk for you, skip it, wait for the next trade. Okay? So, now would be a great time for you to enter a symbol or two that you want me to have a look at. And I'm going to bring our coaching coordinator in, Raul, to help me read out a few symbols so I can focus on the charts, and maybe we can also start answering a few questions. Raul?
It's a beautiful Saturday morning.
Yes, it is.
I had to get up at 5 a.m. thanks to you, but always enjoyed being here. Mm-hmm. Great session so far.
Yeah, great turnout.
I see a lot of great feedback from the folks that are here this morning. Right. Let's start with Expedia.
Sure.
For Jerry.
Okay, let's look at Expedia. So Expedia is another one that we get some really nice setups on. We actually had one just a little while ago. I'll show you, but there was a nice setup here on Expedia, and the one I was referring to is right in here. We took this trade, we highlighted this trade for our members, and did really well on it. But again, what you're looking for are the basics, the trend and momentum in your favor. That slope is everything, okay?
Bobby was asking about SWKS.
SWKS, sure. Again, this is exactly the kind of chart you want to start out with. You know, if you have time and you can remove all the indicators from your charts and just flip through a number of charts and build a watch list of stocks that are trending, in whether it's up or down doesn't matter. It's just that it's a nice, slow, steady trend like that, and you'll be able to pick off some nice trades. Look, there's one right in here, a really nice one. Oops, there we go. One right in there. There was one right in here for you, and let's see, there was a beautiful one right in here. And these are my favorite because look how small that risk is. Okay, let me zoom in on this. Look at the range of this bar. From high to low here, high was 83.33, low was 82.19. Okay, just about $1, what is it, $1.10 or $1.20 or so. Okay, very low risk, and look at that move. Okay? So remember, with the rules we're wrapping around this, The majority of trades that wouldn't work out are not even losers. They're just negated trades. But look at the winners compared to the losers. That's really what makes the difference in the long run. Okay.
We've seen a lot of examples on stocks. James was asking if you can show the E-mini S&Ps.
Sure. Let's have a look at the E-minis.
And maybe we can do it on a smaller time frame here.
Yeah, sure, we can do that too. The time frame doesn't really matter, okay? It works really well on any time frame. Let's go to 4 hour. Well, let's zoom in a little. Here, so here's one on the 4 hour. That's really nice. I really like trading from an intraday perspective, the 15-minute, the hourly, and the 4 hour, which work really, really well. Now let's take an area in here, for example. And see, there was one in here. Although this one would have gone up slightly and then pulled back on you and stopped you out here about 3 candles later. That's going to happen as well, but that's all part of trading. And then let's zoom out again. Oops. Let's see. Yeah, there was one up in here as well. Let me see if I can zoom into that part of the chart. There's a really nice one right in here as well. Right in there. And now if we move to, say, a 15-minute, we also have members trading this on a 5-minute basis. Let's zoom in a little here. There's another nice one right in here. Okay. So you're going to find these all over the place. There was actually one right in here too. So any time frame, any market, we have people trading this over in Australia as well, different exchanges. It's just straightforward technical analysis.
Michael's asking, is the ES chart too choppy? And then Vicky says, is it too risky to trade on the smaller time frame? Is it riskier to trade on the smaller time frame?
Any system based on technical analysis, the shorter the time frame, the riskier it's going to be, and the more challenging it will be to trade, because you yourself have to be a little quicker. If the higher you go in the time frame, the more accurate it is. But really, I always tell people the time frame should depend on how much time you have to devote to your trading. If you can be in front of your screen all day, then you can look at the intradays. If you're working full time or raising a family, don't have a lot of time, you only have a couple hours on the weekend, then switch to weekly charts. But it works really well.
Dario, Edwin, and Clifford all want to know about Apple.
Apple, sure. Apple's always very popular. Oops, had a typo there. Let's go back to the daily here. Apple's got some really nice setups here when it happens. There's another one in here. And when Apple starts moving, and Apple typically consolidates into earnings and then explodes. You will find this a lot, and now it's doing it again. You see how we're consolidating sideways, and we have earnings coming up. So heads up on Apple after earnings. You'll get this kind of effect. If you notice here, earnings was over here. We got this huge move. Then we got another one here after this earnings, and after this one we got another one, etc. So that's where you want to look for your next setup.
Brenda's asking, how do you deal with earnings that are coming up in Apple or in any other stocks with this system?
If we're in a trade ahead of earnings, I always like to be out just before earnings. Earnings is a gamble. It can gap on you either way. So I always say, before you enter a trade, look for, and find out when the next earnings date is. And if it's too close, if it's only a few days away, then skip that trade. During earnings season, you can look at ETFs, currencies, anything that really doesn't have earnings, and to avoid getting caught up in earnings.
Can we do a Forex example?
Sure.
This is coming from Neil,
Yep.
who's in Melbourne.
Okay.
He wants to know about the Australian dollar, New Zealand dollar.
Sure. So let's look at the Aussie, New Zealand dollar. There we go. Again, you're looking for these, and see, I'm able to see these right away. I've been looking at charts for so many years. I'm training with this system for so long that it's very easy for me, but it won't take you very long at all to spot these, okay? So, and you know, a lot of people say hindsight's 20/20. Sure, you can just go to these big moves and find some trades, but this is how easy it is when you're flipping through charts. All you're looking at is the far right. And what's the first thing you notice here? You notice that slope, right? You notice the trend and the momentum. That's in place already. So then all you're doing is waiting for some kind of pullback and that reversal signal. Okay, so it's very, very easy to spot. And when you see a market like this that's trending really nicely, it just hasn't given you a setup yet, move it onto a watch list, create that watch list, and then over the next few days, you'll start getting those setups, okay?
Gareth is asking about Gilead.
Sure. GILD. Oh, this was one of my favorites in here. Look how small that candle was, and look at that move that happened right after. Okay, these are the year makers. These are the beautiful trades. Now, currently Gilead has been chopping sideways, and you can see that the moving average is completely flat. Okay, now we do have earnings coming up. Hopefully that'll give us a move one way or the other and create a new trend for Gilead, but right now it's in a period of consolidation that you do not want to trade in. Okay, so let's see.
I've got Caitlin asking for British pound, US dollar.
British pound, I believe we covered that at the beginning. Yeah, this was the chart of the British pound US dollar. Multiple setups along this trend. This one was the disqualified one. Again, can't say it enough. When you do get that retracement and you get that reversal pattern, whether it happens in front of the moving average, on top of it, or beyond it, what you want to make sure of is that you still have that slope in the 20-period moving average. That is key, okay? Remember that.
Excuse me, James, Bobby, Michael, James, another James, Vicky, Yemi, I do see your questions, and we will get Vince to address them shortly after he finishes his presentation. So
Okay.
I'll let you get back.
All right, let me just bring this back up here and just summarize what we've got. So I've shown you a system that will work on any market, okay? Stock options, futures, forex, globally, any time frame, any price level. You saw just how easy it is to spot the setup on your chart. And again, this has been extremely consistent for us. It's very strong, and you can use it as a standalone strategy or a great complement to whatever you're trading with, because after all you're putting on your chart is that 20-period moving average. You saw that it tends to move in your favor immediately, and one of the best parts of it is that the majority of the trades that don't work out are not even losers. They're just negated trades. Now, I notice there's still a ton of questions. I'll try to answer as many of them as I can, but let me tell you about a pro class that we have coming up on May 30th, 1 p.m. Eastern. It's slotted for 2 hours. I'll be teaching this class, and it will be recorded if that time doesn't work for you. But at this pro class, I'm going to show you again the full setup from start to finish, including 5 different exit strategies that we've used with this. But I'll focus on the one that myself and the other traders here use on a regular basis. I'm also going to teach you a very unique way to add support and resistance that really increases the accuracy of this. Now, this is extremely accurate as it is, but when you add this support and resistance in on any night, let's say that you might have 5-6 trade setups, this will help you separate the really, really high probability trades from the average trades so that you can select those 1 or 2 best for that time period, okay? I'm also going to teach you 2 Fibonacci tools, one that will help you with the entries, and 2, the other one that will help you identify targets, okay, profit targets. And to make sure you're very active with this system, in addition to the engulfing pattern, I'm going to teach you 4 additional trade setups. So In other words, the basics of the system remain the same. You're going to be looking for that trend, that momentum, but once you get that pullback, when you're waiting for that reversal signal in the form of an engulfing pattern, there are 4 other setups you can look for there, and I'll teach you those as well. And then as a bonus, I'm going to share with you the one tool that will save you hours and hours of research finding trades every week. And then one of the most popular parts of this class is that at the end we will actually be doing a search for real-time trades setting up that week. Okay, I'll share my watch list with you. I'll show you how I manually search for trades, and we will together go through that. Sorry, I was told May 30th is actually a Saturday. I apologize. The slide should say Saturday. But the link for this class is tradingwins.com/candle. But before you order, let me tell you exactly what you're going to get so you know that this is right for you, okay? As soon as your order is processed today, about 30 minutes afterwards or so, you're going to get an email with a link to the recording of the previous pro class we did, which was actually just yesterday. We did a class on yesterday, and you're going to get that recording, so you don't have to wait until May 30th. You can watch this and start trading with this right away. The other thing, regardless of the recording, we're going to reserve a seat for you at the live class on May 30th, and we're also going to throw in a 30-day membership to our pro service. Let me tell you a bit about that. Our pro service is the most powerful way to get access to all our systems. Okay, you're going to get real-time trade alerts showing the entries, the stops, profit targets. Okay, it's really the best part of the service. And you also get premium nightly videos that teach you how to trade the various systems that we have. You get access to a members-only weekly chat. It's every Thursday morning from 10 a.m. to 11 a.m. and they are all recorded in case you can't make that time. You get to come into our room and ask me any trading related question that you like. They're really great sessions. And in addition to all that, you can access our library of past educational sessions on our site, and you can always re-attend any of the pro webinars that you've paid for in the past for free. So it's a really amazing value, and you get all of that free for 30 days. Total value for this is $691, but for any of you on here today, all we're asking for is $97. Okay, the link is tradingwins.com/candle. Now we do have to limit it to 25 people because our goal for that class is to answer all your questions so that when you walk away from that class, you're able to trade this completely on your own. Okay, it's another reason why we send you this recording of the previous class so that you can watch it a couple times, make a note of all your questions, and bring those to the session. Okay, again, this is everything you're going to get, and it's tradingwins.com/candle. Now, if we have any time left at all, be happy to answer a few more questions or look at a few more symbols.
We have a lot of questions. I'll go through them as quickly as I can.
Sure.
David says, have you used options in order to gain more leverage and reduce risk with this system?
Yeah, actually, we trade this almost exclusively with options. It's a fantastic way to leverage this system using options. And actually, if I haven't mentioned it, during the pro class, I am going to teach you how we trade this with options. In other words, I'll tell you what kind of expiration we look for, what kind of delta we look for, when we would buy a call or a put versus selling a credit spread. All of that we will show you during the class.
Cookie says, must the lower time frame agree with the daily chart?
You know what, it doesn't have to. What our research has told us is looking at the one time frame is strong enough. But of course, if you want to make it even stronger, you can certainly look at a higher time frame for sure.
Is your stop recommendation a bar by bar method, or do you use a 20 moving average stop?
No, it's the bar by bar. It's our stop starts just below the setup bar, and then we're going to show you a way that we trail our stop, because our goal once we're in a trade is to move that stop from below the bar to just above break even as quick as possible.
Michael says, like earnings volatility, do you also watch for dividend dates?
No, actually, we do not. they're insignificant in most cases. They have no effect.
Cliff says, is it a simple moving average? Yes. Many people ask why the 20, not the 50 or
You know,
200.
the 20 is simply the most used moving average by both retail traders as well as professionals, and so it works best.
Deborah says, Vince, wonderful system, just signed up. Thank you so much for Deborah. Do I need any special equipment or software to be able to join you on the class on the 30th?
No, any charting platform. There are many free platforms out there that are great. It's all fun.
James says, I use NinjaTrader. Will it work on that?
I'm sure it'll work on any platform. Yep, NinjaTrader. There's some of the free platforms, BigCharts.com, TradingView, Stock Charts, all good.
Tad says, is the long entry based on the trade above the wick high or the close above the wick high?
On the trade above. You can be even more conservative if you like and wait for the close, but not necessary. Just a trade above is fine.
Vicky says, I'm traveling most of May. Vicky, good for you. I hope it's on vacation.
Yeah.
Could I have my access to the member section for June? Absolutely.
Sure. If you want to delay your free membership, by all means, you can just send us an email at info@tradingwins.com, and we'll set that up for you. Yep.
Michael says, testimonial, that class is excellent and, well described.
Thank you very much. Yeah, there's a lot of material covered in that class, a huge amount of material covered in this class. So,
Vicky says, great, I just signed up and we'll delay the membership month. Vicky, thank you so much for that. We're looking forward to seeing you on the 30th. Please do send us a message just after the session to info@tradingwins.com, and we'll be sure to defer that membership for you. Vince, what happens with the membership at the end of 30 days?
If you're joining the membership, you don't need to do anything. It'll automatically renew at $97 a month. But if for whatever reason you'd rather not continue, just give us a call and we'll put a stop to it. We have a joke going around the office that it's the world's easiest cancellation policy.
Kyle says, Vince, I've enjoyed these sessions in the past. I'm looking forward to seeing you again on the 30th. If there's a spot for me, I would like to attend.
Excellent. Looking forward to seeing you there.
How much of the discussion during the class on the 30th will be specifically on option strategies?
You know, we'll spend about 15-20 minutes talking about exactly what type of option series you want to look for and when you should be going long an option versus going short an option. We'll give you all the details you need to be able to trade this with options.
Steve is asking, I just signed up now. Thank you, Steve. Will my 30 days start on May 30th? No, your 30 days will start tomorrow.
Yeah, that's right. And our videos are from Sunday to Thursday. We send out the videos. And then our weekly chats are every Thursday morning. So you should be all set up in time to get your first video tomorrow night.
Vicky says, I have not heard the upgrade video yet. Could you describe it? I know you offer a little bit of a discount, or not a little bit, a big discount on your day trading crash course.
Oh, yeah, I guess once you sign up, there's an offer for a day trading strategy course, a recording of it. And we sell it for $149 on our site. And we're offering it for $27 there if you're buying this.
And it works well with this strategy.
It works very well. Yeah,
if
absolutely.
you like peanut butter, you should get jelly too on the sandwich.
That's right.
Ken says, when can I get the recording? Ken, as soon as the orders are processed, you will get the recording within about 30 minutes or so. If you have any difficulty, let us know. Your pro membership should be set up by tomorrow. The first nightly video will come out to you tomorrow.
Yep.
We also have a market chat on Thursday, which you can sign up for. We'll get you all the details on that. Michael is saying, do you have a Metastock scanner for this? We do.
We do, actually.
We don't have enough time to go through it now, but we can put it in the chat box if you are.
Yeah, we'll put a link there. And if you ever have any questions or having trouble with your order, email us at info@tradingwins.com. There's also a live chat feature on our homepage.
Okay. Quick thanks to Mark, James, Frank, Monica, Dan, Jack, Graham, Terrence, Mike, Rashawn, Aisha, David, Bharat, Peter, Maureen, all for signing up for the session on the 30th. Super, super excited. Those are fantastic sessions. Yesterday we were here for 3 hours.
They do go longer. So the recording you're going to get for yesterday is about 3 hours long. Okay, so enjoy it, but I encourage you to watch it more than once. There's a lot of material there.
Folks, our time is up. You've got a lot of wonderful speakers coming up. Hope you can join us at the class on the 30th. Reed, thank you so much for letting us be a part of this this class today. Vince, last word.
Yeah, again, thanks for being with us on a Saturday morning. I hope you got a lot of value out of this, and I look forward to seeing you at the class on Saturday. And a big thank you to Reed and everyone else at Investor Inspiration for having me back on. And as always, I really hope we can do this again. With that, Reed, I'll hand it back over to you.
Vince, always great having you on. A lot of great feedback in the chat box. I'm seeing a lot of great engagement, which is always fantastic to see. Ladies and gentlemen, that was Vince Vora from TradingWinds.com. A great company to work with. We've had him on many times, and I always love listening to Vince speak. You can really tell that he's passionate about what he does. So I highly suggest if you're looking to further your trading career, check out TradingWinds. You know, a really, really great spot. A bunch of great people work there. I know them personally, so I highly suggest you guys going to follow that link in that chat box as well. So, Vince, thank you so much for spending some time with us today, this Saturday. It's a great presentation, and hopefully we'll be talking to you very, very soon. All right, ladies and gentlemen, one moment here while I bring in our next presenter.